Okay, other principles, we have two more. Materiality and conservatism. Focus more on conservatism here. Okay, conservatism is a principle that guides accountants to, under cases of uncertainty, they have to measure the highest possible level of losses and liabilities. So for example, if the company is involved in a lawsuit case or in any situation that is they're dealing together with government agency or any fraud-related cases, they have to disclose information on potential losses and liability to the highest possible level. Okay, so if this lawsuit case is not finalized yet, that's okay, but this information needs to be disclosed in footnotes so that outside users know what's going on in the business at this moment. Okay, so any lawsuit cases, if the attorney is able to determine a possible loss amount, then that amount also needs to be disclosed in financial statements. So other examples here, if there was a catastrophe that happened, hurricane, earthquake, tornadoes, anything that potentially or readily destroyed a part of the corporation's asset, let's say the realization of the exact amount of losses is still under process, but you still need to let outside users know. If this is the end of the season, you need to let them know what's going on in the business, there's potential damages, and possibly what is the highest level of amount of loss. So basically anything that relates to creditors or investors' capital, anything that will potentially damage their capital that they contributed to the business, those information has to be measured and disclosed. Okay, so conservatism here, you can think of this as more pessimistic in a sense. So basically, companies do not want to get involved in later on lawsuits from shareholders or creditors saying that they didn't have enough information to make a decision because they don't know about any potential lawsuit cases or any losses that has actually been encountered in the business now. Okay, now any revenues and gains in accounting, we wait until it's really earned, then we disclose this information or capture it. So expenses and losses, even though it's still pending, we disclose this information. Any bad news related needs to be disclosed up front. Okay, anything that relates to gains or revenues, we wait until it's really finalized. For example, if your company wins the lawsuit case, wait until that is finalized, then we disclose this information. Okay, now materiality guides accountants to take care of the significant transactions more compared to less significant transactions. So here you just have to know the general idea. We're not going to go into detail how to determine what is significant, what is not. Basically, it's that dollar amount, let's say $10,000 amount of transaction definitely will be more significant than a transaction on minor supplies that only worth $100 or $200. So accountants will need to make sure that those $10,000 or a couple $1,000 of transactions are being reported, journalized, and summarized correctly. You have to spend more time on making sure those transactions are correct compared to the ones that has less significant dollar amount. Okay, so materiality basically means that accountants need to put more weight on those significant transactions. Usually it's measured by dollar amount in proportion to total assets or in proportion